Hey guys, what's up? PipSnipers here, back for another update. Let's take a look at BTC over here on the 4-hour. Now, I do think that Bitcoin has a good shot at coming back up to the 9 and 21-day moving average. The 21-day moving average sits at 116,603, and I do think in doing so, we'll wick up to the 9-day moving average at 117,619. Now, something that'll give us a little bit more confluence to that idea is the fact that we have a lot of liquidity right at that breakdown area. Okay, so right around here, before things started to get really fast, right around here we have a big liquidation cluster. So just above equilibrium of this range. Okay, this is the liquidation cluster, and I do expect price to gravitate back to this mean before we can get the next direction. Now, personally, I think that this is just completing a 335 Elliott wave flat pattern. The worst case scenario would be that we actually lose this third wave low and come down for a fifth wave towards the macro 50% fib. When you take a fib from the April low right up to the October high. So taking a fib right from this low up to this high, you see how we already hit the 38.2% fib here? This, in my opinion, was our selling climax from my perspective. So what you're going to have in the market is, so let's just say the market is doing this and then it falls like this very fast. Okay? This over here would be considered your selling climax. Then you have your automatic rally, right? Because you bounce up very fast off the lows. You have your secondary test. Then you have your failed breakout. And then you have your secondary test in phase B, either sweeping an internal range of your last leg to the upside and then pushing up higher, or sweeping the secondary test lows and then pushing up from there. Back to the liquidity cluster that we have here. Okay, so now this type of schematic happens in all markets and in all time frames. So in order to confirm that this is going to be a higher low here, a truncation of the fifth wave, what we would want to see is for the price to go no lower than 107,907 and 106,857. We could still hang around here at these lows and make a higher low to come back up to this liquidity cluster as shown on the liquidation heat map. Okay, so this is what it would look like. Okay, you get your selling climax coming right down to the 200-day moving average. And if you guys don't remember, I was making a few videos back in mid-September, and I did say that there is a possibility that Bitcoin comes back to the 200-day moving average because we never fully tapped into it. You see how we just came very close to it, but we finally tapped into it with that liquidation event. So what I'm thinking over here is that this is your selling climax, the largest liquidation event in history. You then have your automatic rally to the upside, coming right back up to the 50-day moving average and 100-day moving average. Then you have your secondary test, your failed breakout above the highs of your automatic rally, and then you have your secondary test in phase B, like I said, either sweeping the internal range of the last push up and then popping off, or coming down below the secondary test lows, like around here. So in order to simplify this, it would basically just look like this. You'd just be coming down to these fibs and then popping off to then fill in this, to then take out this liquidity. Okay, that's the base case. Right? The worst case scenario is that we actually lose that 786 and we have that fifth wave down to around 100,201, right around here. Okay, I mean, we could even sweep these lows here. We could even sweep these lows. So if we sweep the lows, or if we end up going below the adjacent low that was set on October 10th, which is sitting at 106, 115, and then you see the price start to rally back into this range, then it's possibility that this is just a sweep before we come back to equilibrium, right? Or worst case scenario, we actually end up making a wave 5 to around 100,000, 201. So now, I found something very interesting, okay? Now, I was taking a look here at the business cycle, right? The ISM. We can take a look at it together, and I'll show you how well it called a top back in the previous cycles. So let's go over here and I'll show you how this looks. So this over here was back in 2021, right here. So this bottom pane is USB-C COI, United States ISM Purchasing Managers Index. It's a good representation of where we're located in the business cycle. Okay, you can see over here at Bitcoin made a slightly higher high back in 2021 of March and November, but this index made a lower high. So that's your bearish divergence, which then ended up marking the top for Bitcoin and the start of a big bear market. And then over here, we ended up forming a lower low. And then higher lows. But you can see over here, we were still printing lower lows here as we were printing these higher highs, like right here. So that marked the bottom. And then we went on this huge expansive rally right here. See how we went on this huge rally after? So it marked the bottom every single time. So what if Bitcoin is not following the 4-year cycle and the market's not following the 4-year cycle, but instead it's following the business cycle? What about that, right? Let's go back here to 2020. Or sorry, let's go back here to 2017. Right here. We can zoom in. So from here, we have lower highs. And it just kind of, from here to here, yeah, like, and then if you take a look here at this RSI, you can see that it was coming down here, right? And this is when this business index was at the highs of its own range. Right now, the ISM is still at the lows of the range. So what if this is just a minor correction and we actually end up recovering out of this? Right, so we have this, and now although we do have some bearish indicators on Bitcoin on the high time frame, like for example, this 3-day stock RSI turning down from the lows, or even if you take a look at the MACD or RSI, yeah, it's definitely showing that we could be in for very bearish times. However, at the same time, we have a lot of conflicting data between the bull and bearish case. We can even see that the Russell 2000 is firmly breaking out from its highs. Now I'll make another video separate to this one on the Russell 2000 along with all the other indices. But so far we do have a nice strong break on the Russell, and yeah, you know, it was just following this 50-day moving average, or it was just holding it as very strong support. You see how it held it over here, popped off, and everyone thought it was over here, and then it got saved. Very similar situation over here. Everyone thought it was over here, and you know, this correction lasted about 28 days. This one lasted about the same length. So let's just see how the price plays out going forward. Just to recap, what I would want to see here on Bitcoin is for the price to go no lower than 107,907 and 106,857 on a closing basis in order to consider the idea that we end up forming a higher low, a truncated wave 5, before we come back up to take out this liquidity resting here at around the 116 to 117 area. Otherwise, we will come down to this 50% fib at 100-201, and then we will take it from there. Maybe even come back to the top of this range, back to the lower quadrant. But so far, nothing right now shows that. I shouldn't say nothing. I mean, there are things that are showing that Bitcoin is bearish. However, there is a lot of conflicting data. So we just have to continue to monitor, and in next video, I'll make the updates on the indices. Hope you guys enjoyed the video. If you guys have any questions, please feel free to let me know. Please like, share, subscribe, and comment. Peace out, and take it easy. I'll see you guys in the next one.